Hello everyone, I'm Chris Kapches, CEO of Chestnut Park Real Estate, and today I'm going to provide you with the February market report for Toronto and the region. The last report that I did, which was at the end of January, I was actually quite looking forward to doing this particular report because at that time I thought the market was starting to recalibrate and starting to shift to a much more positive outlook, primarily because of the uncertainty component. What's been holding the market back, and you'll see some graphs as we proceed through this market report, what's been holding it back has basically been the uncertainty that's been prevailing in our economy. And that uncertainty has prevented both buyers and sellers from effectively behaving the way they normally would in a market that didn't have all these fears and, again, to repeat myself, uncertainties. Unfortunately, at the tail end of February, even more uncertainties begin to prevail in the marketplace. We now have a war in the Middle East, and that came about at the very end of February. I think people were feeling a little uncomfortable as we were moving towards the end of February. And then, of course, everything exploded, one might say, no pun intended, at that time. All of that uncertainty is very, very prevalent in the February market data that I'm going to share with you. Effectively, February, particularly from a sales perspective, is one of the weakest Februaries that we've seen in more than a decade. But overall, we have sales that are down, we have the average sale price that is down, and somewhat perplexingly, we also have inventory that has decreased in February. In the real estate community, mid-February is sort of seen as the spring market, when sellers begin to put their properties on the market, buyers become more enthusiastic about all the properties that are available to them, and we see the market begin to turn in its normal fashion. This year we have what an economist has called an inventory paradox, in that sales are down and yet inventory is also down, which is something we haven't experienced in a very, very long period of time. But let me tell you about the sales. In February, 3,868 properties were reported sold. And you'll see from the chart that's on the screen what that means in terms of this year compared to last year. We are down 6.3% in sales this February compared to last year's February. And last year's February was a particularly weak month. So if we're down this February compared to last year, it's an indication of how weak this February was. Interestingly enough, as I mentioned a little while ago, new listings also down. Active listings at the end of February also down. That inventory paradox that I talked about, and not surprisingly, the average sale price also came down in the month of February. But what I want to show you is exactly how low the sales that were achieved in the month of February actually are. You're going to see on the chart all sales for the month of February going back to 2018. And you'll see from that chart that it's been a fluctuating number. Back in 2018, in February, 5,142 properties were reported sold. As I mentioned a moment ago, this February, 3,868. That's quite a decline, particularly since in 2018, the population of the Toronto and region area was substantially lower than what it is today. The other date that I want to focus on is February 2020. Now, that was the month just before the COVID-19 pandemic. And in that particular month, you can see that the number of sales that were reported were 7,256. 7,256, almost double what we saw in the month of February 2026. That is a clear indication of how much the market has declined, particularly since the peak of the market in 2021, 2022, that pandemic market. It has continued to decline between 2023, 2024, 2025, and unfortunately, we're seeing it decline once again in February of 2026. What else is happening in the market? Well, the average sale price came down, and we're down by about 7% compared to February of last year. So now we're coming in just a little over $1 million, $1,008,000 was the average sale price. That is interesting because it's becoming somewhat reminiscent of where we were just before the pandemic market, which I just spoke about a moment ago. At that time, the average sale price was around $900,000, $910,000. So we've retracted to that number as a result of all the uncertainty and the other factors that are at play in this marketplace. But one thing that I did want to focus on is the listings coming to market. As I indicated, the new listings that came to market dropped by 17%. As I mentioned, February is the beginning of the spring market. In the spring market, that's when all the properties should be coming on the market, not being taken out of the market. But that's what's happening this February. The sellers, not certain as to where the market is going, waiting for stabilization, are deciding not to put their properties on the market. And as a result of that, we're seeing fewer listings on the market at the same time that we're seeing fewer sales. As I mentioned, kind of an inventory paradox, which is not something that we experience regularly. Not surprising that the days on market also increased in the month of February. We're up to 36 days. Last year it was 27 days. Again, reflective of what's going on. You'd think with declining inventory levels that the days on market would actually speed up, but that isn't happening. I should also mention that the market is fractured. It's not a homogeneous market that we're looking at, because there are some micro marketplaces that are actually doing exceptionally well. One in particular is semi-detached properties all over the city of Toronto, but in particular in the eastern districts. And for example, in the eastern districts, the average sale price for all semi-detached properties came in at $1,184,000. Interestingly enough, all the properties throughout the city of Toronto sold in only 20 days. In the eastern districts, they sold in 15 days. Now compare that to the overall market, which was about 35 or 36 days. That's quite a difference. What does that tell us? It clearly tells us that there are buyers for that particular type of product out there, that inventory, the semi-detached. There's just not a lot of it out there. It is also being retracted, again, presumably because sellers are waiting for more stabilized conditions before they bring more properties on the market. But it does indicate that buyers are there for the right product. I should lastly mention that the other reason why the average sale price is lower than it was last February, two factors. One of them is the 905. Average sale prices have declined much more so in the 905 region than in the 416, the city of Toronto. And the other factor, of course, are condominium apartments. Condominium apartments are the weakest micro market, although they're not that micro, it's actually a fair size market. They are the weakest housing type that is currently on the market today. And between the 905 and condominium apartments, which are now starting to trade around $600,000, depending on where you find yourself in the 905 or the city of Toronto, they are dragging the average sale price down. So there's been quite a bit of price stickiness for semi-detached properties and detached properties in the city of Toronto in particular, but not so much in the 905, and definitely not in the case of the of condominium apartments. So as we close out the month of February, we're moving forward with all the uncertainty in the world. As I said, there's conflict in the Middle East, oil prices are rising. All of that is creating an uncertainty level that we haven't experienced in a long time. And I think that points to the fact that we're going to see a continued instability through the month of March. But I look forward to being here at the end of March to explaining everything that is going on. And hopefully, if some sanity prevails in this world and some certainty comes back, we may have some good news at the end of March. So until then, stay well. Thank you.